Good morning, everyone. Thank you for attending our webinar today on filling out the PPP loan forgiveness forms. We're just going to give it just a few more minutes, let some more individuals sign in, and then we'll go ahead and get it started. Hope everyone is having a great day. It's a beautiful day here today in Michigan. Hope it's beautiful where you are. For those of you just joining us, we're going to go ahead and just give it another minute or so. Just let a few more people attend. Okay. Let me go ahead and get started. Again, good morning and thank you for attending our webinar on the PPP loan forgiveness forms. My name is Brandon Garner. I'm the sales manager here at Superior Trucking Payroll Service. A couple of housekeeping information for you. All your lines have been muted during this webinar. If you do have a question or inquiry, there's an inquiry box located on the right-hand side of your menu. Please feel free to put those questions there anytime. We will have a Q&A session at the very end of the webinar, and that's when we'll cover those. We have a pretty packed house today, so we're going to answer those in the order that they came in. Don't click on the black X box because it'll exit you from the webinar. And if you'd like to shrink the webinar, there's the double arrow. And then we will also have a recording of this webinar that we'll send out to everyone at the very end. So about Superior Trucking Payroll Service, what do we do? Well, we're a full-service payroll administration that specializes in the trucking industry, working with trucking companies that want to take care of their drivers and their employees by providing efficient and accurate payroll, also building driver trust through pay transparency, which we can do with a customized pay stubs. These and the items listed on the slide are just a few of the payroll services that are trucking specific that we can do for you. And then we're going to talk about our speaker today. Our speaker today is the founder of Superior Trucking Payroll Service, Mike Ritzma. He brings with him 20 years of payroll experience, 10 years of trucking finance experience, member of many trucking associations, and he was a former CFO for a pretty large truck fleet and brokerage here in Grand Rapids. And with that, I am going to hand it over to Mike.
Thank you, Brandon. A few more little housekeeping things. This is a standard issue slide that we've been putting in all of the COVID-related webinars. I'm not a banker, I'm not a lawyer, attorney, whatever you want to call it. I'm not a lender, I'm not a doctor, I'm not an epidemiologist, any of those things. I'm an accountant and administrator, but I think that can be helpful in these times. But since we're talking about laws, I always want to make sure everybody knows I'm not representing myself as a lawyer. On advice of lawyers, I'm supposed to tell you that. We're focusing today on the changes in what's going on. And on the webinar topic, we're not focusing on the politics and what's right and wrong or any of that kind of stuff or whose side is right. There are a million other webinars you can watch for that. We're doing this, we're here to help trucking families, the families of the drivers, the families of the trucking company owners, the families of the trucking company offices. That's why we do these things. And then I also include the snippet from an email from a bank that I work with, and they sent out another one very similar to this last week, saying that while the SBA is putting out guidance, they're not really telling the banks a whole lot yet, and so the banks want to make sure everything is absolutely buttoned up on everything. And so just kind of bear with your bank on this stuff, your lender. If we give you advice here and you follow it and the bank disagrees, your bank wins because they're the ones who have the authority to forgive the loan. So I just want to remind everybody of that. Kind of cut your bank some slack. for today's webinar, we're going to talk about the PPP loan forgiveness forms, and now it's plural. There's 2 forms, and hopefully that makes it easier, but we'll see. We're going to talk about which one you need to complete and how to complete it, and then other things that you can do to get ready for coming out of the coronavirus fog, as I keep calling it. I don't know if that's a proper terminology or not, but that's what it seems like, a fog to me. And then question and answers. Normally we do about a 25-minute webinar and 5 minutes of questions and answers. I'm shooting to give a little more time to questions and answers because we've had a lot of great questions in these webinars that we've done related to the CARES Act and FFCRA and the PPP loan forgiveness. We did a webinar on this 3 weeks ago. So you guys ask great questions, and please continue to do that by asking these questions. Other people get to learn the answer too for a question they may not have thought of. And so that's great. So I'm going to try and leave some extra time for that. We want to answer as many as we can. If we don't get to your question in the webinar, we will still answer it. So feel free to pump it in there, even if it's something tangentially related to this. So on with that. The SBA they looked at their original form for loan forgiveness, and it was 11 pages long. And since it's the SBA, which is Small Business Administration, somebody decided that maybe that was too much, and kudos to them for that. So they have now changed the form to make it easier for you to fill out, hence the easy name. There are some conditions that you have to work for your company for you to be able to complete the easy form. There's 3 categories of people that can use the easy form. One of them is the self-employed people, or people who didn't use any employee salaries in the calculation of their PPP loan. I don't think that's going to be many of you. I think there may be some self-employed people listening, and if you are, that's great. You qualify. That's awesome for the easy form, but that's not my thought, that this is going to be most of you in the webinar. There's also the second one that I think is where we're going to get a lot of people. Did not reduce wages by more than 25% in the covered period compared to first quarter of this year, and did not reduce hours or employees between the first of the year and the end of the covered period. I'm going to go to the third one in a minute, and then I'm going to come back to this end of the covered period because this is important. The third one is did not reduce wages by more than 25% compared to first quarter and was unable to operate at the same level due to compliance with the Center for Disease Control, Health and Human Services, or OSHA, regarding COVID-19. I'm still waiting for a little clarification on for example, the HHS and OSHA. For example, if your customers couldn't be open because of it, I feel like you're affected, but I don't. Is it your compliance to the standards with the CDC and those guys, or is it your customers? Well, for trucking, a lot of your plants shut down, so a lot of your shippers were closed. So I think some of you maybe qualify through that one, but I'm going to go back to that middle one a minute. They want to, if you didn't reduce wages by more than 25% in the covered period, comparing Q1, first quarter 2020, and the end of the covered period. The covered period is a change from the PPP Flexibility Act, which means originally the PPP was you got basically 10 weeks worth of payroll as a loan, and you could use 8 weeks worth of payroll to get that part forgiven, plus some utilities and things, which we'll still talk about. But in the PPP Flexibility Act, they changed it. You could have 8 or 24 weeks of payroll forgiveness. And so at the end of 24 weeks, which would be the end of the covered period, from 24 weeks from when you got your loan, from when you were funded, it's basically 6 months. It's a couple of weeks short of 6 months. If you were funded the 1st of May, you're looking at October, November. And by then, I think you're going to be within 75% of your original headcount, hopefully, and your original hours. You're not cutting anybody out of hours. And further, if you're still looking to replace people and you can't hire them, you should be fine there too. Or if people retire, they don't really count. So I'm thinking almost all of you are going to be in that middle one where it did not reduce wages by more than 25%, because by the end of the covered period, it's not the average for the whole covered period, it's the amount at the end. And so, by then we're going to be trucking, and demand is going to be pent up, and we're going to be moving some things, and we're going to be starting into Christmas stocking up. So, which is kind of nice to think about, because then you don't really have to think about all the COVID things. But yeah, so I'm thinking that most of you are going to qualify for the second one. Now we have audience participation time. This is really easy. It's not painful. Let's see here. I'm going to launch a poll. Do you currently believe, and hopefully you can see this, I don't do polls a lot. Do you currently believe that based on what you know as of right now that you'll qualify for the easy form? So I'm going to give you about 30 seconds to fill that out. You're not required to do this. We're just trying to get an idea. Part of it is where we're going to go with the rest of this webinar. And I'll share the results with you. I don't know if it'll display it or not, but I'll tell you where we end up percentage wise. We'll give it like 10 more seconds. There's still some votes trickling in. 74% of you have voted, so good job. I appreciate that. Some of you may not be trucking companies. I know we've got some attendees often that are other people that help trucking companies, so that's great too. All right, 5 more seconds and we'll be done. There's still some people clicking yes and no. All right, we'll wrap it up. 81% of you that responded, and thank you everybody who responded, said that you believe that the easy form is the form that you're going to be able to fill out. And 19% said that they do not believe that they'll be able to use the easy form. As such, we're going to spend most of the time on the easy form. How do I stop this poll here? Well, it'll keep going. Let's see. Close. All right, that poll's closed. So let's talk about this easy form. Always a little concerned when they don't spell easy full out, but that's okay. It's a 2-page form. This is on the screen right now is the top half of the first page. I wanted to show it to you just so you could see it and kind of know what you're going to be up against. But this is all demographic. There's no math in any of this really. You know, your PPP loan number and your lender PPP loan number, your disbursement date loan amount, your bank has all that anyway. So you'll be able to get that if you don't know it. The covered period, as I was talking about before, you put your start and end dates. It's either 8 weeks from when you were funded or 24 weeks from when you were funded. The alternative payroll covered period, there's a little bit of manipulation you can do to line up your pay periods. It's not significant. And again, with 24 weeks to get your loan forgiven, you should be able to get it forgiven. And then they have a checkbox for if your loans exceed $2 million, which I think is interesting because they did not put a limit on the size of the loan to use the easy form, which surprised me. I thought they would, and they did not. So yeah, hey, if you got 1,000 trucks and you applied for a PPP loan and got it, hey, good for you. You know, you can still be able to use the easy form. So that part's easy. That's all just like putting your name on a test. Okay, now we've got the forgiveness amount calculation. This is a snapshot of the next section of the page, and I'm going to go through it with you, but I just wanted to show you the whole thing first. It's similar to what the original PPP forgiveness form was. It's just a little easier. You've got payroll costs, you've got, you know, as you can see, business mortgage interest, business rent or lease, business utilities. You add them up, you look at your PPP loan amount, you get your max based on your payroll, and you get your forgiveness amount. It's pretty straightforward, but we're going to go through some of these in a little bit more detail. Let's talk about payroll costs. Payroll costs for non-owners, and this is going to matter, it's up to a prorated $100,000 a year. So if you're using the 8-week period, it's 15,000 and change is the maximum per person. If you're using 24-week, I think it's like 45 grand and change in there. You can check my math, but that's 100,000 divided by 52 times the number of weeks, either 8 or 24. You can also include health insurance costs. This is health insurance, basically net of the employee contribution for non-owner employees. Same thing for retirement contributions. If you're putting money into a 401k, like as a match or a simple IRA or any of the other retirement vehicles, that's employer contributions that aren't for the owner, those go into your payroll costs. State and local tax assessments, I wrote assess in there, that's my bad. On employee compensation, that's usually just state unemployment and things like that. If you have local tax assessments that are employer taxes, those would also count. Again, more everybody's going to have state unemployment, so that's really going to be the main part of it. And then they talk about owner compensation. The owner compensation is limited to $20,833, even if you use a 24-week covered period. So for an employee, you could put $45,000 in there about if you paid them $100,000 a year. But for the owner, you're limited to the $20,833. That $20,833 is the 10 weeks or the 2.5 months of the $100,000 is kind of where they got that number. But you don't get to expand that to be the full $45,000 that you would get from as a non-owner. They do define owner. I didn't type it all out here. More than 2% of an S corporation, I believe it is. A partner, if it's a partnership, a sole proprietor, if it's a single owner, a single member LLC, things like that. It's the usual tax things. If you've got a question about it, you can hit me up with it and we can look it up. But that's owners, you usually know who the owners are. And so, but again, with 24 weeks, you should be able to kill that whole loan right here. We should be done. We're going to go through the rest of it anyway, but we should be able to knock this out because you were lent on about 10 weeks and you get 24 weeks. If you're over 75%, which 81% of you said you qualify, and part of that's being over 75% at the end, I'm confident this will be enough to get you there. Now we kind of lump the next three together. We've got business mortgage interest, business rent and lease, and business utilities. For mortgage interest and for rent and lease, they talk about rental or lease of real or personal property, and they talk about mortgage for real or personal property. Personal property is a truck and a trailer. Real property is land. Personal property is everything else. So I would tell you if you didn't get there on the wage to get your whole loan forgiven, and by the way, the government wrote this program with the idea that you're going to get your whole loan forgiven. They don't expect you to pay it back. They expect that you're going to use it to pay your employees. So you may not even need this part, but if you do, I would add those in. If you still didn't get to your 100% of your loan forgiven, I would add in truck payments. I would add in trailer payments. I would add in, any of that stuff to get you to your total. It's got to be leases or mortgages that started before February 15. But that's not the end of the world. I mean, most people have rolling truck payments anyway. I can't imagine a lot of people were buying trucks in April and May, but I guess some people could have been. Utility costs, which would be phone, heat, gas, or gas, electric, not heat. Heat you get however you get, water. Some people have asked about cell phones. I would say to include them. I've seen that question before. One of the things that they mention in the SBA guidance, and I'll have a link for this later, is they talk about transportation utilities, to which many enterprising trucking people go, oh, truck fuel, truck maintenance, that kind of stuff. That's not what it's about. Transportation utilities are about delivering the service to your building or whatever, from what I've read about it. So truck fuel is not considered to be a utility from everything I've seen. It'd be nice if it was. Again, I don't think you're going to need it. Truck fuel is really more of a cost of goods sold kind of thing. And so for the accountant people out there, more goes into that, so that you won't be able to deduct it here. That said, if you want to try it and your bank make your bank say no, hey, more power to you. I've also seen where going back to the payroll costs with American Trucking, somebody from the last webinar sent me something that the American Trucking Association had sent the SBA a letter asking for guidance and suggesting things like truck fuel be included and that per diem be included as part of the payroll cost. I did not see where the SBA has responded, but at least they're trying to do something. Again, I don't think you're going to need it because you're going to have so much in payroll from 24 weeks when you only were able to borrow on 10 in the first place. So I think that's going to be helpful. Now we get to the bottom part of the page I showed you earlier. You add up 1, 2, 3, and 4, which is the payroll cost, the mortgage, the utilities, and the rent. You put that in line 5. Your PPP loan amount, you put in line 6. That's going to be easy. The payroll cost requirement, that is there because they require at least 60% of your loan forgiveness to be payroll cost. Again, I think you'll exceed it already, but one never knows. So they want to make sure that, you know, if you had $50,000 in payroll costs, then they'd say the most that you could have forgiven is 83,333. That's what they're driving at, is to make sure at least 60% of the forgiveness amount is payroll cost. They divide it just to try and confuse people, I think. So you've got those three numbers. The smallest one is your forgiveness amount. I think that you're gonna exceed it just in line 1, which makes all the rest of this, there's no real math to do for line 7 because you're gonna be way over your loan amount anyway. And one of the things that they did say in the instructions too is if you don't want to include the tractor and trailer payments, you don't have to. They don't require it. So if you get there on line 1, if you get to your total loan amount on line 1, which I expect most of you will, then you don't have to bother with lines 2, 3, and 4, and you just drop those numbers forward. Your forgiveness amount will be your PPP loan amount. Shoot it off to your bank, hope they don't ask for anything else, and you're good to go. That's all the math of it. That we're done with the math, and so that's really good. Now they have a bunch of representations and certifications that you have to make. I'm not going to go through all these. Basically, what these say is I am actually eligible to fill out the EZ form, and that I use the money the way I was supposed to use the money, and I don't want to go to jail for it. You can read them all at your leisure. And then the bottom part of that, page 2, that was the top of page 2. This is the bottom of page 2, is you know, again, authorizing that you're at least one of these things where that you can use the EZ form, and you sign it and you shoot it to your bank, and hopefully your bank will be able to forgive the loan. Your bank may require a different form. Your bank may require this in a different format. Do what your bank says. Do not just show up with this form and insist that you're right. Even though you are right, the bank is the one that forgives the loan. So let's keep that in mind as we're going through this. Now we're going to talk about the long form, but just very briefly because not many of you needed that. I put a YouTube link up there. This is a webinar that we did about 3 weeks ago on the long form. I don't want to rehash it all now. You have to go into some more detail. You have to list out your employees, and you have to list out FTE equivalents and things like that. But it's right there. I even put it because it took like 2.5 minutes of empty air before it started, so I'm having it skip that. That's why that equals 161S on the end. That makes it move forward. So that'll start you right where it starts. You can watch that anytime. There's no registration required. I also did a PPP loan example with the long form after that webinar that we did. That's at our website, truckingpayroll.com/PPP loan. Make sure you use all caps for the PPP and the L for loan. Otherwise, it's going to give you whatever the message is that we can't find it. The only thing that's changed of significance from when we did that webinar is, number 1, you have 24 weeks to recover the money, and number 2, you only need 60% for payroll. The rest of it is substantially the same. If you have questions about it, reach out to me, even off webinar, just email me or call me and we'll talk about it. But hopefully you can still use the short form anyway, but that's what we're seeing. So we've already done this webinar. It's at your leisure to watch it. But again, drop some questions in on me if you need anything about that. What else should I do to get ready? When I say get ready, I'm talking about what I keep calling the COVID-19 fog or the coronavirus fog. As we start coming out of this, what else should I do? The biggest thing that we're telling our clients right now is to look to improve or add to your driver roster. When you registered for the webinar, we asked you a question: are you looking to add drivers as we come out of the fog? And what did not force a response, we're not making a condition of being able to see the webinar, but most of you did, and we're grateful for that. Over 55% of you said specifically you're looking to add drivers as we come out of this. It doesn't even talk about, I didn't even ask about improving drivers, like you would want to swap out your 10 worst drivers for 10 new drivers, and this might be the time that you can do it. I just talked about just adding to the fleet. So well more than half of you are looking to do it. With that in mind, I would start now. Everything, I know every state is different for how open they are, and your customers may not be opening for a while. They may already be open. I wouldn't know that. But I would get way out in front of this because I think there's going to be a driver hiring surge, kind of like what we had a couple years ago when the rates were really good in 2018, if you want to remember the good old days of 2 years ago when rates were really strong and everybody was looking for drivers. Get out in front of that if you can. One of the things we really recommend too is to use an applicant tracking system to process your applications, to collect them and to go through them, and you don't lose anybody, and so you follow up on the right people. We have one that we really like. You can reach out to Brandon for a demo. He's the expert on this thing, and he can show you how it works and how it can help you. It's not, it's not our main job, but we're here to help trucking families, and this is the way that we do it. The next thing we recommend is to take this time that, as the volume's been down, this is the time administratively where we can make the changes we always wanted to make. We knew the things that would be better for us, but we never had the time to do them. This is that time. Let's not waste it. Let's get some things done. If you need, the example I used in the last webinar was, for example, if you were looking to change fuel cards, this would be the time to do it because you can get all your drivers in and swap out the cards and get that stuff done if there's one that's a better setup for you. Or if you use a factoring company, and you were looking to maybe switch that. And I'm not suggesting a factoring company or anything like that, but I'm saying this is the time to do it, and you can set yourself up for long-term gains because the short-term pain won't be as bad right now because you don't have there's not as many moving parts. The other thing is, if you've got the cash from the PPP loan and you were able to keep yourself mostly employed, I would pay down your non-qualifying debt. And what I mean by non-qualifying debt is debt that doesn't qualify for the PPP loan, or you don't need it to get the loan forgiven. If you get there in payroll, pay off some of those trucks, pay off some of those tractors if you can. You can always reborrow on it later, and it'll pay off in the future. Other ideas that we have, we put this in most of all our webinars related to COVID-19, is encourage direct deposit. It's a big deal. That people aren't touching checks and having to go cash them and get cash. There's also issues with delivery, and mail is slower and things like that. So if you mail checks out to people, it takes them longer to get them. 100% direct deposit is what we encourage. Some states allow it to be mandated, some don't. Make sure you're in compliance with your laws. If you have a question about which states they are, you can let us know. Be ready to go back to remote work. This could happen. I'm not getting into the politics of whether there's going to be a second wave or whatever. But there's between a 0 and 100% chance that it's going to happen, like there is for everything. So we may want to, the first time it kind of caught us off guard, maybe we need to be prepared. None of us really, we all think we know, but none of us are 100% sure what's going to happen. So really, if there's equipment you got to get, if there's phone systems you got to get, if there's ways to keep your office people engaged or whatever, your drivers engaged, that you can do better, I'd be looking at that, because this could come around again. And then just an encouragement that I think rates are going to go up. I think that there's going to be a burst of manufacturing once we get everybody back going. There's going to be a burst of demand. It's going to roll into the fall, and then we're going to roll into Christmas. And if we're either at a new normal of this is just how coronavirus is and we're going to deal with this for however long, or it gets better and we're not having to deal with it as much anymore, I think that hopefully we'll see some some good holiday sales activity, which also makes all the plants work, which gives you guys loads. So I'm optimistic about the long term. We just got to get there. We're just in the bad part right now. Here's some links. We got some helpful things here for you. There's the links to the forms that I showed you, the easy form and the long form, and then some definitions from the government about what all these things mean when they're talking about payroll costs. They go and define it there, and they talk about all these things. So I thought those are good things to have in case you're wondering. It's kind of some of my source documents for this thing. How did I get to this? So we got those in there for you. And then we've got another one of just some useful links. We always ask people to ask if there's other links they can share that you think are helpful. We'll put them on our website at the coronavirus page, but these ones are pretty good. The SBA has been really good about updating their page. The IRS has been good about it too. I put that PPP loan one in there. Again, that's the long form demo. that if you want to see a form filled out kind of in order of how it's filled out, I think that's going to be helpful. And I think that's it for those things. Before we go to questions, I've got one more audience participation poll that we've got here that I'm gonna drop out to you. Let's see, let's launch this. We look to continually help trucking families. And when we say trucking families, we mean, again, the owners and the office people and the drivers. We all need each other. And so if there's any webinars that you'd like to see us do by the end of the year, this is your chance to tell us about it. So if there's any you'd like, let us know. We're happy to, and this isn't a percentage thing, and we're not really going to display the results because I'm not promising you I'm going to do one, but I'm going to try and do them all. If we've got interest, we're always looking for topics on what we can do webinars to help trucking companies be more successful. We know it's better if trucking companies are successful, and we also know it's really hard. So if we can make it just a little bit easier, we want to do that for you. So with that, Brandon, do we have questions?
Yes, we do, and great webinar, by the way. So this is kind of just a generic question, and really, I think it's very important, especially with the EZ form. So the question is, so I just complete the EZ form and send it back with no back documentation? Is that accurate?
That is an awesome question. And from everything I'm reading, that's it. You're not going to have to send in 941s. You're not going to have to send in pseudo unemployment forms listing everybody's wages out. You're not going to have to send a listing of wages. You're not going to have to do any of that, which is crazy to me. It seems like an incredible lack of accountability, but that's not my decision to make. So your bank may require something because they have not yet received guidance from the SBA. So they may require something. That's still to be determined. But if your bank requires it, of course, because you are an honest person, you're going to deliver it. But I don't think it's going to be required.
Okay. Next one kind of deals with employee count. Employee count at the time of forgiveness. Do I include this figure? Do I include this figure, the registrations, etc., so that the figure is higher than the employee count at the time of the loan application? Does that make sense?
Yeah, I think what they're asking is we're talking about the FTEs because you got to be like the 75% requirement. You don't have to cover people that retired, for example, like that sort of thing. And I would also assert that, and I think there's going to be more clarification about this. Part of the 24-week instead of 8-week thing is it kicked out 16 more weeks for them to make decisions and to clarify things. I think that if you're actively trying to restore your employees, and again, trucking is such a different deal than everything else the SBA deals with because you, as a rule, equilibrium is you're looking for drivers all the time. And so I don't think it's an issue of FTE count for you guys. And I think that if you're showing, look, we're trying to hire these positions and we just can't fill them, you should be okay on the FTE count on that. And I think that's what he's asking because you're trying to, so this figure is higher than the employee count at the time of the loan application. Yeah, I mean, I figure the FTEs are I mean, yeah, I think you're going to make it. I think that I'm sorry that the question's a little confusing, so feel free to reach out to us, call us, or email us, and we'll go into it in more detail. I just want to make sure that I'm answering the question you're asking. But I would include, yeah, including the resignations. Yeah, if people quit you and you didn't replace them, but you're trying to replace them, I would include them. I think that's the answer to the question you're looking for.
Next one. Loan payments for truck and trailers. Is this interest only?
No, it's payment amount. As long as you don't prepay, it's principal and interest, which is amazing. I mean, the whole point of the loan was to get you through the cash flow crisis. And so, yeah, it's the same thing. To me, if you consider it too, it's kind of like rent. The rent isn't just the interest part because there's really not interest in operating leases. And so the rent for your building, that's just rent. And so it's the whole payment. It's not just the truck and trailer lease, but it does have to be a loan that started after February 15, so you can't go get a 1-month loan for a new truck and try and forgive the whole thing.
How many more do you want to do?
I got a couple minutes. Yeah, as long
Okay.
as people are willing to hang around.
Sure. We have 3 employees that have been working fewer than 40 hours by their choice. They are under the 75%. We did not cut their hours, they did. Do we have to lower our forgiveness due to them?
Well, you're going to figure out, you can figure out their FTEs as, okay, they're under 75%. I'm going to say that they're working 25 hours for this example. They're each then rounded off to the nearest tenth. They're each 6/10 of an FTE. So I don't think it's going to matter if you have a bunch more employees, because you'll get to count them anyway. As long as your total FTE count is within 75%, you're gonna be fully. You can use the easy form and you'll be fully forgiven. Also, if they cut not related to COVID and they chose to do it, that's kind of like retiring. So I think you're going to get to count them anyway. I would try and count them. And like again, unless it's a COVID or FFCRA related. When I say COVID, I mean all these different changes and all that, not just one particular law. I would count them. I think you can do that. And again, if you've got your drivers, I'm always going to count a driver as a full FTE, unless they only work a day a week or something, because we don't track hours for drivers. Nobody does. That's hyperbole, but many don't. And so I would, I think you're going to be covered anyway. But because you'll get the 75% is total. It's not individual person.
Okay. What if you paid utilities out of another account? This is a great question, by the way. What if you paid utilities out of another account, not the one you deposited the PPP loan in? Can we still use it? Still pay out of the truck account?
Yes, absolutely. The PPP math for the loan was on 2.5 months, but your payroll itself, just even as a regular payroll, for example, employer share of FICA, which is Social Security and Medicare, and federal unemployment are not deductible for the purpose of payroll, for the payroll calculation for the forgiveness. And if your payroll is done all through one account, that's all getting probably taken out anyway if you're using a payroll provider of any kind, even if you're using QuickBooks or something. So you're already going to have mishmash in there. So yeah, you can absolutely have it come out of another account. We have clients that we use that use us that's told us, hey, start taking it out of our PPP account, but they're going to run out of money before they run out of weeks, because we're taking out everything. We're taking out our payroll service fee, and we're taking out the employer share of FICA and the employer's federal unemployment. So we would overdraw it if we kept going all the way through. So you can absolutely do that. The point of the second account was to help you keep it separate. But you already know, since you're already we're looking at this, you're already keeping it separate anyway, I can tell. So that's awesome. We got time for probably one more. Picked up
One more.
everybody whose question didn't get answered. We will reach out to you. We will
Okay.
probably send out all the questions and answers to everyone, so everybody can see all the questions, even if it doesn't get answered during the webinar.
Okay. I see we're employees who made over 1,923 during any 1 week in 2019 are not eligible. Does this include bonuses? If so, almost no one will be covered.
I think that it's possible you're misreading it. I think it's limited to 1,920, or like it's limited to $100,000 a year. That 1923 times 52 weeks is $100,000. And so you've taken the annual amount and divided it out. The amount of forgiveness is limited to the 100,000 annualized. It's not in 1 week, because yeah, like especially in trucking, right? You have somebody goes, if you're in New Jersey and you're sending somebody to California, it's going to take them 2 weeks to make close to 2 weeks to make the round trip, and they're probably going to get paid more than that in one payroll. So yeah, you'd lose everybody. Or if you did one-time bonuses that exceeded that, you'd lose everybody, or year-end safety bonuses, or however you might compensate your drivers. So no, they're eligible. It's just you're capped at how much of theirs can be forgiven. You were also capped in how much of a loan you could get for them too. You could only borrow 2.5 months at the annualized at 100,000 on them anyway. So you were already having to exclude part of their wage, and so the forgiveness will line up right with it. So I don't expect you'll have any problems. But again, if you want to talk about it in more detail, email us. We got our email right on the screen there. We're going to send this webinar to everybody. That's a standard question that we get every webinar. Everybody who attends is going to get a PDF of this. So you'll have all the links, you'll have everything you need, which is good because like the YouTube channel or the YouTube one is all these characters that don't make sense. So that's good. And also one of the things too that we ask you to do is you can see on the bottom of the page right now is our YouTube channel with all those goofy letters. We're still some subscribers short. We can turn that into a nice, easy to read URL if we get up to enough subscribers. So if you could please subscribe to our YouTube channel, that would be awesome. Once we get there, I can have a much better link. We only post helpful trucking things on there. We don't, you know, and YouTube is a rabbit hole in and of itself, but we post things like these webinars there, and we post 1-minute trucking tips there, and we'll post interviews that we do with people there. So please subscribe to the YouTube channel. That would be really great of you. And with that, I think that we're going to have to call it a day. We're already 10 minutes past, so I'm sorry that I went past the webinar time. Thank you everybody for attending. We will send out the PDF to you as soon as we can, and we'll answer the questions for you as well. We look forward. Thank you for everybody who participated in the polls, especially the last one. We look forward to putting together some more great webinars and helping your trucking company be even more successful. And with that, we wish you a great rest of the day.
Thank you, everyone.